So now we know the basics of how Entrepreneurs Relief works, let's have a go at what it might look like in an exam question. So we've got an example here, 14.1, and if we go straight to the requirements, it's asking you to work out EMEA's capital gains tax. Now EMEA is making a number of disposals, so we need to look at the disposals and decide whether they get Entrepreneurs Relief or whether we just treat them as a normal asset. So if we start at the top then, EMEA has always run two businesses for many years. He installs aircon units and he also manufactures specialist products. And he decides to carry on with the part of the business that's installing the aircon units, and he wants to sell the manufacturing concern. And it says the two businesses are capable of independent operations. So that's telling us that we sell a substantial part of the business. All right, our business is made up of two elements. All right, we've got the installation of the aircon units and we've also got the manufacturing business, and each can operate on their own. So by selling one, it's not going to stop the other one happening. There's no suggestion there to say that it isn't a going concern, and he's run the business for many years, so it meets that 2-year time limit. So let's see what it says then. So when he sells these business assets, he creates these chargeable gains. So both of these are business assets, goodwill and the warehouse disposal. So the net gain we've got there is 30,000, and that's going to be entitled to Entrepreneurs Relief, right? Because they are business assets and it meets the criteria of selling a substantial part of the business. Now, in addition to that, he sells one of his other assets in the air conditioning business. So this is the part of the business that's going to carry on. But what he's doing is he's selling a single asset, creating a gain of 24,000. This does not have Entrepreneurs Relief. All right, so we're identifying what gets the relief and what doesn't. So let's just remind ourselves why. So if we go up here, selling all or part of a business. So the manufacturing business meets that criteria, and we've had it that 2-year period, so that's okay. All right, but here we're not ceasing the manufacturing business, we're carrying it on. We're not selling all or part of it, and it's not a share. So it doesn't meet any criteria to get this Entrepreneurs Relief. Now, it does go on to tell us a bit more about EMEA's, but let's focus on what we've got at the minute then. So what we're going to do is we're going to separate the Entrepreneurs Relief gains from the other gains. Okay, so the Entrepreneurs Relief gains, we've got the, what did we have? We had the goodwill, for 70,000, and we've also got the warehouse, which is for 40,000 loss. And then in the non-Entrepreneurs Relief, we've got the manufacturing asset. We don't know what it is, we'll just call it a manufacturing asset, and that is for 24. So the net gains we've got is 30 and 24,000. Okay. Now we need to look to see if there's anything else that we can reduce that gain. So what we saw in the last chapter, that gains can get really reduced by losses brought forward and any annual exemption allowances. Now, these gains that you've got here, the entrepreneurs' gains are going to get taxed at 10%. All right, that's what Entrepreneurs Relief is. The first £10 million of gains get taxed at 10% if they get this relief. Whereas the other gains are 10 and 20% if they're normal assets, and if they're a house, then it'd be 18 or 28%. So when we do any deductions, we're always going to deduct from the other gains first of all, because they pay a higher rate of tax to the entrepreneurs. So if we go over here, it doesn't mention that there's any losses. In fact, he says he hasn't made any disposals before. So he can't have any losses, but that does also tell us that he still has his lifetime limit of 10 million. So he's not used any of that yet if he's never made any qualifying disposals. So he's going to get his entrepreneur's relief. So no losses brought forward, but we do have an annual exemption. And because I've got other gains, I'm going to use it against that. All right. If there weren't any other gains, yes, you'd still use it against your entrepreneurs, or the balance as it was. So let's bring it down to the chargeable amount. So gains are 30 and 12,000. Now the next step is to calculate the capital gains tax. So for the entrepreneur's relief gains, provided they are less than the 10 million, which they are going to get taxed at 10%. That gives me a tax bill there of 3,000. But then we've got our other gains. And as we know, the other gains can be taxed at either 10 or 20%. So in order to decide what rate they're going to be taxed at, we need to look at what this other person has got in their income. So Amir has got net income of 46,900 before personal allowances. So their taxable income, for income tax purposes, will be 46,900 minus their personal allowance. So they will be paying tax on 34,400. The reason we're looking at that, if you remember about your previous chapter, is that your capital gains tax is based on what you've used of your basic rate band. So far this person has used 34,400 of their basic rate band for income tax purposes. So that means whatever's left, they can use for capital gains tax. But in fact, the band is bigger than 37.5, isn't it? Because it says that he makes a gift aid donation of 400. All right, gift aid, along with personal pension contributions, are things that extend the basic rate band. So we're going to increase the band by the gross gift aid donation. So when an individual pays any gift aid or personal pension, they always pay the net, which represents 80%. So that 400 needs to be grossed up 100 over 80 because it represents 80%, and that grosses up to 500. So in total then, that band is going up from 37.5 plus another 500 to 38,000. And therefore, if we look at what's left of the band, if we move that, the band difference is between what they've used for income tax and the new figure of £38,000, which leaves us 3,600 left to use for CGT. So I would imagine in your minds now, what you want to do is tax 3,600 of that gain at 10%, and then the rest of it at 20, because that's what you've been doing in chapter 12. However, here's a little twist. Because you've got entrepreneurs' gains that are able to tax at a lower rate, if your entrepreneurs' gains here, this 30 grand, exceeds what's left of your band, then that means that none of your other gains can be taxed at the lower rate. So even though you've worked that out, all of the gains will need to be taxed at 20%. So in total, your tax bill will be 5,500. And I know it doesn't ask you about the due date, but let's keep reminding ourselves the due date will be January 21, which is January after the year end, which is 1920. Okay, so watch out for that for entrepreneurs. I'd always do the calculation to show, you know, what's left of the band, because quite often there are marks for working that out, knowing that the band gets extended, knowing what you've used after personal allowances. All right, but generally, because unless you've got a huge amount left and you've not got much entrepreneurs' gains, if you've got entrepreneurs, then quite often that band gets wiped out. So everything else gets taxed at 20% because you've had some relief as such already.